In 2007, BlackBerry was so vital that presidents, chief executive officers, and celebrities demanded one. Its market value soared above $67 billion, and it controlled half of America's smartphone world. 8 years later, BlackBerry's empire had evaporated, burning through roughly $84 billion, and collapsed almost overnight. How did engineering brilliance and global obsession turn into one of tech's most abrupt downfalls? The answer begins long before the world heard the word iPhone. On a chilly March day in 1984, two engineering students from Ontario, Mike Lazaridis and Douglas Freegan, registered a small company called Research in Motion. Their headquarters sat above a bagel shop in Waterloo, a far cry from the glass towers of Silicon Valley. What drove them was not a vision of mass-market gadgets, but a fascination with wireless data, how to move information securely and instantly, even in the most demanding environments. Early contracts came from police, firefighters, and the military, all needing bulletproof communication. The company's first inventions, like the DigiSync film keycode reader in 1988, solved complex problems for a select few. Lazaridis, always the hands-on engineer, obsessed over reliability and security, insisting that every device meet standards most consumers would never notice. The real breakthrough began with Mobitex, a packet-switched wireless network designed for mission-critical data. Research in Motion engineers spent years building hardware that could tap into Mobitex, compressing messages to travel quickly and securely, even on slow connections. The team's pride came from solving problems others ignored: battery life, data integrity, and encryption. This engineering-first culture became the company's backbone. Every new hire learned to value stability and privacy above flash or mass appeal. In 1992, Jim Balsillie joined as co-CEO, bringing financial savvy and a hunger for growth. While Balsillie courted investors and struck carrier deals, Lazaridis kept the engineering focus razor sharp. Research in Motion went public in 1997, raising 30 million Canadian dollars, and signaling that wireless data was no longer a fringe idea. Still, the company's biggest leap was ahead. On January 19, 1999, in Munich, the BlackBerry 850 made its quiet debut. It looked unremarkable, a pager with a tiny QWERTY keyboard and a monochrome screen. But inside, it was a revolution. For the first time, business people could send and receive email in real time, from anywhere, with the tap of a thumb. The device ran on Mobitex, using Research in Motion's proprietary compression and encryption. No one else could match the speed, security, or reliability. The BlackBerry 850 was not just a gadget, it was a lifeline for executives who needed to stay connected, no matter the hour or location. This obsession with secure, instant communication became Research in Motion's identity. Engineers built systems that never crashed, networks that never leaked, and keyboards that felt like second nature. The company's DNA, forged in the world of emergency services and high-stakes business, would shape every decision to come, sometimes for better, sometimes for worse. In the late 1990s, though, it set BlackBerry apart as the undisputed pioneer of mobile email, laying the foundation for a global empire built on trust and technical mastery. BlackBerry's transformation from a niche business tool to a global necessity happened at breakneck speed. By the early 2000s, the device had become more than just a secure email pager. It was a badge of honor for executives, politicians, and celebrities. The term CrackBerry started circulating in newsrooms and trading floors, a nod to how addictive the constant stream of messages had become. Nobody wanted to be the person who missed a critical email or failed to respond before a competitor. The launch of BlackBerry Messenger, called BBM in August 2005, turned the device into a social lifeline. BBM offered something no one else could: free, instant, encrypted messaging between BlackBerry users, complete with read receipts and group chats. For a generation of professionals and teenagers alike, BBM pins became as essential as phone numbers. Entire social circles and business deals lived inside those blinking red notification lights. Switching platforms meant losing your BBM network, a price few were willing to pay. Behind the scenes, BlackBerry's grip on the market tightened through its unique relationship with mobile carriers. Unlike rivals, BlackBerry operated its own global network operations center, known as NOC. carriers paid Research in Motion a fee for every BlackBerry user on their network, a recurring revenue stream that made BlackBerry irresistible to telecom giants. These NOC fees aligned BlackBerry's interests with the carriers, who in turn pushed BlackBerry devices to corporate clients and government agencies. The more users signed up, the more locked in the ecosystem became. By 2007, BlackBerry's subscriber base soared past 10 million, and the company's market capitalization topped $67 billion, making it the crown jewel of the Toronto Stock Exchange. Jim Balsillie's aggressive expansion strategies, striking deals with carriers on every continent, targeting emerging markets, and flooding boardrooms with BlackBerry devices fueled a sense of inevitability. The BlackBerry keyboard, with its satisfying click and unmatched speed, became the gold standard for mobile productivity. The device's presence seeped into popular culture and politics. World leaders typed out statements on BlackBerries. Investment bankers sent deals from taxis and airport lounges. For many, the idea of switching to another device felt unthinkable. BBM groups, secure email, and carrier incentives created a moat that outsiders struggled to cross. At its peak, BlackBerry was more than a product. It was a habit, a status symbol, and a lifeline. The company's ecosystem had become so entrenched that even the boldest competitors struggled to break through. The world seemed firmly in BlackBerry's grip, with no sign that anything could shake its hold. In 2009, BlackBerry unveiled App World, hoping to keep pace with a new kind of smartphone competition. For years, BlackBerry's strength came from its tight focus on secure email and messaging, but the ground had started to shift beneath their feet. As the mobile world moved toward richer experiences, developers became the new power brokers. They were no longer content to build for a single, closed system. The rise of the App Store model, pioneered by Apple, changed what users expected from their phones. Suddenly, a device was not just a tool for communication, it was a gateway to games, productivity, music, and social networks. App World launched with only a few hundred apps, a fraction of what was available on rival platforms. Developers, drawn by the promise of larger audiences and better monetization, flocked to the iPhone and soon after, Android. BlackBerry's catalog stayed small, and the most popular new services often skipped the platform entirely. For users, the difference was obvious. While friends on other devices shared photos on Instagram or played the latest games, BlackBerry owners found themselves waiting or left out completely. The company's relationships with mobile carriers, once a source of strength, became a double-edged sword. Carriers had long benefited from BlackBerry's network operations center fees, but as data usage exploded and app-centric devices drove up revenue, their priorities changed. They began to question the value of BlackBerry's closed ecosystem and started pushing devices that offered more freedom for both users and developers. Inside BlackBerry, engineers and product managers debated how to respond. Some pushed to open up the platform and court developers aggressively. Others clung to the belief that security and reliability would keep users loyal. As the catalog lagged and user requests piled up, cracks began to show. Developers, frustrated by outdated tools and limited access to hardware features, started to walk away. High-profile defections made headlines in the tech press, and the company's reputation for innovation took a hit. By 2010, the numbers told the story. While Apple's App Store and Google Play each boasted tens of thousands of apps, BlackBerry's App World remained a distant third. The gap grew wider every quarter. For many developers, the decision was simple: build for platforms where users spent more time and money. For BlackBerry, this was the first visible sign that its moat was eroding, not from a sudden breach, but from a steady, silent leak. The company's command over the mobile market was no longer absolute. The app gap had become an open wound, exposing BlackBerry to threats it could no longer ignore. June 29, 2007. Steve Jobs steps onto the stage in San Francisco and holds up a device that looks nothing like the BlackBerry. The iPhone, with its glass touchscreen, single home button, and promise of a phone. An iPod and an internet communicator all in one draws gasps from the crowd. During his keynote, Jobs does not shy away from naming BlackBerry as one of the usual suspects Apple intends to disrupt. The message is unmistakable. The smartphone era is about to be rewritten. Inside BlackBerry, disbelief spreads. Executives trade memos questioning the iPhone's battery life, its lack of a physical keyboard, its security. Some engineers scoff at the idea that serious professionals would choose a device without tactile feedback. The company's leadership, steeped in years of engineering discipline, sees the iPhone as a toy, impressive in design, but lacking the reliability and encryption that made BlackBerry indispensable to business and government. To them, the idea that a touchscreen could replace a keyboard seems not just unlikely, but impossible. Yet, as the months pass, the iPhone's influence grows. Customers line up outside Apple stores. Developers, drawn by the prospect of a new ecosystem, begin building apps that turn the phone into a portable entertainment center, a pocket computer, a social hub. The App Store launches in July 2008, and within a year, tens of thousands of third-party apps flood the platform. Carriers, once fiercely loyal to BlackBerry's network operations center model, start to rethink their alliances. The iPhone's appeal is contagious, crossing from consumers to executives and even government staffers. Then, in late 2008, another shock hits the industry. Google launches Android as a free, open-source operating system. Unlike Apple's tightly controlled platform, Android is open to any manufacturer willing to experiment, including HTC, Motorola, and Samsung. Carriers, eager to loosen BlackBerry's grip and avoid Apple's terms, seize the opportunity. They can now offer a dizzying variety of devices, each tailored to different tastes, price points, and features. Android's flexibility becomes its weapon, and the app ecosystem grows at a breakneck pace. For BlackBerry, the ground shifts almost overnight. The moat built on carrier partnerships and enterprise security starts to crumble. Carriers begin to prioritize iPhones and Android devices, which drive higher data usage and, crucially, do not require paying BlackBerry's recurring network operations center fees. Developers, already frustrated by BlackBerry's limited tools and smaller audience, turn their attention to platforms where users are spending more time and more money. Inside BlackBerry's boardrooms, the sense of urgency intensifies. Leadership debates how to respond, but the company's DNA, optimized for reliability and security, makes it hard to pivot. There is no consensus on whether to double down on the keyboard, open up the platform, or chase the new touchscreen trend. The world outside, meanwhile, is changing at a speed BlackBerry cannot match. The iPhone and Android did not just introduce new phones, they rewrote the rules of the entire industry. The competitive landscape that once seemed stable is now a battleground, and BlackBerry finds itself on the defensive, scrambling to keep up as the smartphone wars enter a new phase. In late 2008, BlackBerry rolled out the Storm, its first attempt at a full touchscreen smartphone. The stakes were high, Apple's iPhone was winning over customers, and Verizon, desperate for an iPhone rival, demanded a competitive device fast. But the Storm arrived riddled with problems. The screen's unique clickable technology, meant to mimic a keyboard, instead felt awkward and slow. Software bugs caused freezes and crashes. Typing lagged behind every touch, and basic features like copy and paste barely worked. Early buyers flooded support lines with complaints, and returns piled up at carrier stores. Verizon reportedly replaced hundreds of thousands of units in the first months. The Storm's rushed release did not just disappoint, it damaged BlackBerry's reputation for reliability, the very promise that had built its empire. 2 years later, the Playbook tablet followed. Announced with fanfare in 2010, it was supposed to challenge Apple's iPad and stake BlackBerry's claim in mobile computing. But at launch, the Playbook was missing a core feature. It could not send or receive email without pairing to a BlackBerry phone. For a company defined by mobile email, the omission was baffling. Reviewers panned the device and sales stalled. Inventory stacked up in warehouses, forcing BlackBerry to slash prices and write down losses. Inside the company, engineers and managers faced mounting pressure. The culture that once obsessed over bulletproof products now struggled to ship anything on time, and each stumble chipped away at the trust of customers and partners. The Storm and Playbook, once symbols of hope, became cautionary tales, proof that even giants can falter when speed overtakes substance. On January 22, 2012, the era of dual leadership at BlackBerry ended. Mike Lazaridis and Jim Balsillie, the architects of its rise, stepped down together. Their departure handed the reins to Thorsten Heinz, a former Siemens executive brought in with a mandate to stop the bleeding. But the hemorrhage was already underway. Just weeks into Heinz's tenure, BlackBerry reported its first net loss in years on March 29, 2012. The numbers were stark: revenue down, profits gone, and confidence evaporating. As unsold playbooks piled up in warehouses, the company announced a $960 million inventory write-down. Layoffs swept through the ranks, thousands of jobs lost as the company tried to right-size for a shrinking future. BlackBerry's share price, once soaring above $140, hovered near $6.10 by the end of 2012. The company's market value, which had topped $67 billion at its peak, now sat nearly $84 billion lower. Heinz pinned hopes on BlackBerry 10, a brand new operating system meant to reclaim relevance. The launch in early 2013 was backed by a Super Bowl ad and a promise of reinvention. But the phones failed to catch on. Developers and users had already moved on, and the app ecosystem never recovered. By the time BlackBerry 10's flop was clear, the company's fall was irreversible. The empire built on secure communication and relentless engineering had become a shadow of its former self, its dominance erased in less than a decade. Innovation never pauses for nostalgia. Today, once dominant tech giants are forced to reinvent or risk vanishing overnight, just as BlackBerry did. In a world where smartphones outnumber people and disruption is the norm, relevance is measured in adaptation, not legacy. The next $84 billion collapse may already be unfolding, quietly, invisibly, behind the screens we trust most. What company will blink next? Tell us your thoughts in the comments.